Hello everyone. For today's video, we are going to be covering stocks and investment types. So to begin, let's go over what are stocks exactly. Well, owning a stock of a corporation means having partial or ownership or having owning a little small fraction of a company, which it is called a share. And stocks work in this way. So if a company happens to be doing really well, their net worth, their value increases, then your stock price will also increase because you own a partial share of their company. Well, in the opposite way, if a company seems to be failing, if they're going under some turmoil, then if their value decreases, then your stock's value will also decrease. So therefore, you should invest in stocks you believe will increase in value. All right, so let's get into these types of investments now. So we covered stocks, which was a share of a corporation. And now stocks are a little bit risky because they are an investment in one company. Although many people split their stocks across all different companies, just one single stock is an investment in one company. So if a company fails, then your stock price drops. If a company does well, then your stock price goes up. Bonds, on the other hand, are fixed rate investments. So basically, these are interest loans given to you by companies and usually the government. These are usually much safer than investing in stocks when purchasing a government bond because it's very likely that the government will be able to pay you back if you purchase a bond with an interest loan. However, if you purchase a bond from a company, if the company happens to shut down because they happen to just lose business, then they won't have any money to give you back money for the bond you purchased. Therefore, you'll lose your money. So in this way, bonds can be risky, but they're usually a bit safer if you buy a bond from the government. All right. The next type of investment is a mutual fund. A mutual fund is a pool of stocks put together by professionals. So as you can see the diagram, if I move my camera, the diagram below, these shows a bunch of different stocks like Apple, Facebook, Amazon. These are a bunch of different stocks, a group of stocks that a professional puts together and he will share it with you to invest in. And these are usually much safer because they are diverse. You're not putting all your eggs in one basket and they're put together by a professional. But they're also costly because there is a percent maintenance fee that professional will usually charge you for running this and for researching all the stocks to purchase. And the fourth type of investment we're going to be covering in this video are index funds. Now, index funds are a group of stocks set to imitate a larger market. Now, an example is Fidelity 500. So this is an index fund that's imitating the S&P 500 market, which is a big market with a bunch of pools of stocks. And so Fidelity is a smaller market trying to imitate all the stocks that are in there. And so this is heavily recommended by professionals to invest in because it's such a diverse array of different stocks. And there is also a lower maintenance fee, so it's much safer, much less costly, and it's highly recommended for people if they just want to try having a safer, less rapid changing investment account, I could say. So this, let me move my camera again, is a something you may have seen before. Now this is S&P 500 market that we showed the example of before, or that I just talked about. Now, as you can see in S&P 500, there's different groups such as technology right here in the left, services in the middle, basic materials in the right, and you can see all these different groups of stocks. So you may notice Google up on the left, Amazon in the middle. Now, if we were to go to index funds again, these index funds will try to imitate this entire market. So that's why there's such a diverse pool, which people say is much safer, right? And so you can also see how these green companies or the companies that are in green show a positive percentage, while the ones in red show negative, which means they lose money. The green ones obviously made money for this day. All right, so is it important to invest now? Well, by learning to invest now, you're already beginning your savings for the future because you are investing. Usually, you're not investing for current, present, quick money. You're investing to save for the future. And investing, it's exponential growth. You can never predict investing, which is risky, but also reward is that it can grow exponentially. To pay for education, mortgage debt in the future, and it's almost free money if you start now. If you learn to properly invest, it's like you're missing out on, or if you don't learn to properly invest, it's like you're missing out on another source of possible income. So we're going to play a quick game that says which type of investment is that. So we're going to give you different scenarios, and you're going to say if it's a stock, a bond, an index fund, or a mutual fund. The four ones we covered. So the first one, if you notice the icon or recognize the icon, it's Google. So which type of investment is Google if you choose to invest in? So we're going to just quickly go through the answers, but you can pause the video if you ever need to, or if you ever need to stop and think. So Google is a stock because it is one company, right? So you're simply investing into Google itself. You're not investing into a group. And Google, it's not a bond because you're investing or you're purchasing a stock which is ownership of Google, right? So this type of investment is highly diversified and safer because it imitates another larger market. So which type of investment is that? So it's an index fund, right? Because as we mentioned, index fund, we gave the example of Fidelity 500 imitating S&P 500, right? It's imitating a larger market to have a very diverse portfolio. All right, so next one. The government will sell you this and give you interest on the purchase. The US also really wanted the people to purchase it during war. This is a bond, right? Because the government will sell you bonds, and if you purchase the bond, they'll pay you an interest fee on it. And you may recognize the names war bonds, which was very popular during the war because the government needed quick money, so they would sell bonds to the citizens and pay them interest afterwards. All right, so we're going to go into our next lesson, how to invest. So we're going to have one quick slide here, and we'll wrap it up with one resource. So some tips and tricks about investing. So number one is learn about the market. So you can do this by reading the news, scanning what is going on in your world. Are companies making certain moves? Is Apple announcing a new iPhone? What are these companies doing? Next, you can ask your parents questions if they are informed of investing, if they're informed of the market. And just look at the daily stock changes. You can see this on the New York Times, I believe. You can look at it on FinViz, which is the website that I used to show the stock market picture of S&P 500 earlier. There's a lot of resources online. Number two is to create a diverse portfolio. Don't put all your eggs in one basket because if the company fails, you fail, basically. If the company runs out of business, your stock is worthless. All right. And number three, practice. You can practice through different simulations, such as the resource I'll give you in the next slide. And there's a lot of competitions for high schoolers, for even younger people, older people, all through all ages. There's a lot of competitions online where you can just keep on constant practice, and they're free. All right, so this is Investopedia.com, and I recommend this because it follows the real-time stock market, and usually in the main game, there's competitions. You'll be given virtual cash, and so you can spend that on whatever you like. So you should go free, just do like whatever you want to really try experimenting and gain experience. And they have a bunch of good resources on the news, on what's going on in the stock market today, what might happen in the future. Yeah, all right. All right, thank you for listening to this video. And yeah, that's all we have for stock. See you next time.